Thank you for joining us at XM.com. You're watching today's market comment by Haralambos Bisuras. I'm Cristina Marujas. The US dollar continued pulling back against most its major peers on Wednesday, gaining only against the yen and the franc. The greenback seems to be stabilizing today while extending gains against the yen. Following the astounding U.S. jobs report on Friday, the dollar index jumped above its 200-day exponential moving average, and now it is pulling back, maybe to test that average as a support. What could prompt dollar traders to buy again near that zone might be next week's U.S. CPI data for January, as stickier than expected inflation could take the likelihood for a March Fed rate cut closer to zero and possibly reduce the elevated 80% probability for such action in May. The only currency against which the dollar managed to perform well was the Japanese yen, which may have come under selling interest after Bank of Japan Deputy Governor Sunichi Uchida said that the bank will likely avoid raising interest rates rapidly, even after they exit negative territory. However, investors are not fully convinced that the era of negative interest rates will end in April. The April meeting will be the first after the junta wage negotiations, where firms and unions are expected to agree on another strong pay hike. Market participants assign a 68% chance for a rate increase to 0% in April, while such a move is fully priced in for June. The Chinese yuan rose yesterday and it is holding steady today despite data revealing that consumer prices fell at their fastest pace in more than 14 years in January. Perhaps the currency received support from the Chinese stock market, which extended its recovery, as regulators intensified efforts to stabilize the market by placing further curbs on short selling. The head of China's securities regulator was replaced on Wednesday, as policymakers struggled to stabilize the market, while according to Bloomberg, the Regulatory Commission will soon update President Xi Jinping on market conditions. Wall Street traded in the green yesterday, with the Nasdaq rising almost 1% and the S&P 500 climbing to new record highs. The optimism surrounding this earnings season seems to have overshadowed jitters surrounding U.S. regional banks after Moody's downgraded New York Community Bank Corp to junk. In commodities, gold traded virtually unchanged yesterday, and it is slightly lower today, suggesting that it did not attract safe haven flows after Israel rejected a ceasefire offer from Hamas. Oil traders, on the other hand, continued buying on fears that the conflict will continue disrupting supply. On the demand side, the stronger than expected drawdown in U.S. gasoline stocks may have also added support. This was today's market comment here at XM.com.